Hi, we are Group 8 from Division A of April 12 batch. The companies that we have selected are two-wheeler rivals, Hero MotoCorp, formerly known as Hero Honda, and TVS. Here we would talk about the company's financial health and do a small comparison based on a couple of ratios and the cash flows of the company. We have analyzed the balance sheet, income statement and cash flow statements of the companies for 10 consecutive years from year 2002 to 2011. Price to equity ratio. The PE ratio looks at the relationship between the stock price of a company and its earnings. It is the most popular metric of stock analysis. It is calculated by taking the share price of a company and dividing it by the company's earning per share. It also gives you an idea of what the market is willing to pay for the company's earnings. The higher the PE ratio, the more the market is willing to pay. Let us now look at the ratios of both the companies. The PE ratio of Hero is on an upward trend from 2002 to 2011 with a spike in 2005 and 2009. Whereas the PE ratio of TVS has gone through a bumpy ride with a strong dip in 2003 and a spike in 2009. PE ratio of TVS has dipped drastically from 50 to slightly over 10. This indicates that investors are not very optimistic about the future earnings of TVS. On comparing the PE ratio of TVS Motors, which is 12 in 2011, and PE ratio of Hero MotoCorp, which is 20 for the same year, we observe that Hero MotoCorp seems to be a better bet for investors. Besides this, PE ratio for TVS has registered a drastic dip in financial year 2003. This is possibly because of the fact that on 8 December 2003, the par value of shares of the company was split from Rs 10 per share to Rs 1 per share. Price to book ratio. The price to book ratio offers investors a handy, even though fairly crude approach to finding undervalued companies. The value of PBR is the ratio of market price of a company's shares, that is, the share price over its book value of equity. PB ratio remains a tried and tested method for finding low price stocks that the market has neglected. If a company is trading for less than its book value or has a PB ratio less than 1, it normally tells investors one of the two things. Either the market believes the asset value is overstated or the company is earning a very poor, even negative return on its assets. PB ratio of Hero and TVS move in tandem except for the fact that PB ratio of TVS has registered a major dip in 2003. Moreover, TVS PB ratio was also at an all-time low in 2003. This could be because the book value of TVS has increased from 140 in 2002 to 183 in 2003 without a major change in the market value of the stock. In 2011, it is observed that Hero MotoCorp is trading at 13 times its book value and TVS is trading at 2.5 times of its book value. This reflects the fact that the stock of Hero MotoCorp is overvalued vis-a-vis TVS stock. EPS, earnings per share. It is generally considered to be the most important variable in determining a share price. It is also a major component used to calculate the price to earnings valuation ratio. It is the portion of a company's profit allocated to each outstanding share of common stock. Earnings per share serves as an indicator of a company's profitability. EPS of Hero Motors is on an upward trend from 2002 to 2011, whereas EPS of TVS is on a downward trend since 2003. EPS of Hero Motors has registered a sharp hike in FY 2010. It has grown by 74%. This seems to be because of the 53% rise in PBIT. A look at the below chart gives us a clear idea that net profit percentage of TVS is on a drastic downtrend. This could be the possible explanation of the corresponding dip in EPS of TVS Motors. Return on equity is the amount of net income returned as a percentage of shareholders' equity. It measures a corporation's profitability by revealing how much profit a company generates with the money shareholders have invested. The ROE is useful for comparing the profitability of a company to that of other firms in the same industry. ROE of Hero Motor Corp is far better than that of TVS. There is a common trend in both the companies from 2007 to 2009. Both of them have registered a dip in ROE because of 2007 US financial crisis. Return has taken a hit for both the companies. Return on capital employed is a ratio that indicates the efficiency and profitability of a company's capital investments. It should always be higher than the rate at which the company borrows, otherwise any increase in borrowings will reduce the shareholders' earnings. ROCE of Hero Motor Corp is consistently greater than that of TVS Motors. This is primarily because of the higher PBIT over a period of time. As we see in the graph, Hero Motor Corp has registered a spike in ROCE in 2010. This is because of the 58% rise in PBIT in financial year 2010. This is in turn a result of reduction in depreciation, expense and COGS. Let's now observe the cash flows for both the companies. CFO of TVS has always been positive from 2002 to 2011. CFI has always been into the negative territory except for year 2011. This indicates that TVS has been investing regularly for future growth, which is indeed a good sign of company's outlook for future. Moreover, CFO has been positive for year 2008, which is registered as a remarkable dip in CFO. This could be possible because of the 14% dip in sales and a drastic dip of 65% in operating profits. Otherwise, CFO has always remained positive and above CFI and CFF, which reflects the healthy state of the company. CFF of TVS doesn't exhibit any such trend, but for financial year 2011, the company has a huge outflow of rupees 408 crores. This is because the company has reduced its secured debt from rupees 829 in 2010 to rupees 565 crores in 2011. From 2002 to 2011, CFO of Hero Motor Corp has been positive, which indicates a positive trend. CFI of Hero Motor Corp is consistently in a negative territory. This indicates that the company is regularly investing to boost income. Moreover, CFF is also negative. This is perhaps because of the outflow of funds for tax, interest and dividend payments. This clearly indicates that funds for financing activities is derived from cash generated from operating activities. For entire period of 10 years from 2002 to 2011, CFF for Hero Motor Corp is negative. This reflects company's interest in investing for future growth, which indicates a healthy state of the company. Thank you.